Kenya's fast economic growth and its increasingly sophisticated customer base have made the country's insurance sector among the fastest growing in the world, opening up new opportunities for players in the country and those outside. But with the insurance penetration stuck at 3% of GDP, experts say time has come for players in the insurance industry to change tack, become more innovative and responsive to market needs if they are to realize this nascent potential. The conversation begins now as we seek answers on just how the industry can expand penetration at a time when the economy is at its worst. Welcome to this KTN News Special Forum as the world celebrates World Insurance Day. I am your moderator, Abi Agina, for this discussion. I'd also like to invite you to be part of this conversation. You can tweet us using the hashtag Insurance Awareness Day. And remember, our Twitter handle is at KTN News KE, and you can also tweet me at Agina Abi. And I'll be sampling your views as well as taking your questions during this discussion on different platforms, including Zoom. Well, for me to have this conversation, we need to bring you to speed with our panelists this evening. And let me start off with our first panelist, and this is Mr. Jadia Morania, who is the Managing Director of the Kenya Reinsurance Corporation Limited. He has worked with the corporation for over 25 years. He was previously the General Manager in charge of reinsurance operations and has also worked as the Acting Managing Director. He is a chartered insurer of the Insurance Institute of London, the highest and the most prestigious level of professional achievement with the Institute, and a fellow of the Kenya Institute of Management. He's also a member of the Board of Directors of the Industrial Development Bank and ZEP Re. Mr. Morania is the Chairman Executive Committee of the Association of Kenya Reinsurers. Among other notable board position credentials that he holds, Mr. Morania is a holder of the Order of the Grand Warrior Award. My next guest is Mr. Tom Gishohe, who is the Chief Executive Director at the Association of Kenya Insurers. He has over 3 decades of experience in the insurance industry, where he has worked at various levels, including being CEO of 2 different insurance companies. Mr. Gishohe has been instrumental in driving the growth of the insurance industry as the head of the association for the last 17 years. Next off, we have Mr. Nixon Shigoli, who is the Managing Director at AAR Insurance Kenya. He has served in various capacities within AAR Insurance for over 15 years, with his immediate previous role being General Manager, Sales and Marketing. Prior to that, he was Head of Customer Service and Retention. These roles have given him the much-needed experience to drive the company's operations to date. In his capacity as Managing Director, Mr. Shigoli has been instrumental in the positive performance of the business, having turned around the profits from loss position in 2018 to profitability in 2019. His major turnaround strategy focused on streamlining company's general efficiency through digital transformation, a move that he is focusing on to ensure 80% of customer interactions will be through the mobile phone come 2022. And finally, we have a regulator also being part of this discussion. We want to bring in Mr. Godfrey Kiptum. He's the Chief Executive Officer and Commissioner of Insurance at the Insurance Regulatory Authority. Prior to his appointment as the CEO, Mr. Kiptum worked as IRA's Chief Manager for Human Capital Development and Administration. He has a wealth of experience, having worked in various state agencies over the last 20 years. Mr. Kiptum holds an MBA from SM Maastricht, MSM University, where he is an associate of the Life Management Institute of the United States of America. He's also a member of the Chartered Insurance Institute of the United Kingdom. Well, that constitutes the set of my panelists this evening as we unpack this very important discussion as we try to get to the bottom of why is it that our penetration as a country is at a paltry 3%. Well, we want to look at some interesting statistics around the issues that focus on the insurance sector. Let's first understand how is our insurance sector designed in the country. So far, as a country, we have life insurance and non-life insurance. These are the 2 subsets that are predominantly used in the country. Next off, let's take a look at the uptick in the country. We're talking about 3.5% penetration rate in the entire country, compared to South Africa, which they're at about 16%, while Kenya still trails by quite a substantial number. Finally, why have we had a low uptake? Research has shown that customer awareness has been very weak, product pricing has not been favorable, product structure has also played a part towards all this. And my panelists this evening will be helping me get to understand what can we do differently towards ensuring that the industry is on another level. Let me begin by first engaging Mr. Jadia Morania, and this question will also be going to the rest of the panelists. I just want to pick your thoughts on, has the country been able to survive the impact of the pandemic, and how has the insurance industry coped so far?
Thank you very much for that question. Maybe a small comment before I go to that particular question. I know different publications bring out different statistics in terms of the industry.
Yes.
I think the last I saw, if my memory serves me right, for insurance penetration in Kenya is actually at 2.4, according to the ACI publication of 2019. This is a figure for 2019, which is very worrisome in terms of the industry, because we saw a high of up to 3.4% in 2013, after which it has been coming down. So, which makes penetration actually one of a major challenge for the industry. Among other industry-wide kind of challenges that we've always talked about, a low uptake of insurance, which is that penetration, infrastructure in the industry that also needs to be quite developed, especially the uptake of technology.
Sure.
So talking about COVID-19, which is the latest entrant in terms of challenges to the industry, it is actually coming into an industry where we already have challenges, just like any other industry.
All right.
Now, the impact of COVID-19 has been widespread. It has caused, of course, as we all know, depression in terms of growth of the national GDP, the national growth rate. We had the ambitious projections of up to 6%, which we now have seen being revised as low as 2.4%. We have also seen businesses, especially the small and medium businesses, actually kind of being distressed in every sense of the word. Some have been forced to shut out of the lockdown, and a lot of them have been forced to extremely low levels of operation in terms of activity, which has come with a multitude of other outcomes, such as unemployment and economic distress, speaking generally.
All right. Such not a good time to be in the insurance business, by what I'm getting there. Perhaps let me also bring in Mr. Shigoli, who is from AAR. What has been the experience so far?
Thank you. The insurance industry has had a big hit because if you check in the last year final results, insurance made a loss, especially on the general side, of around 75 million in payment of claims versus the premiums collected. So the outbreak of the pandemic in Kenya has made the situation even worse, because already we were in a loss-making position. However, this comes with the new opportunities, because now people have to think from scenario 0 to scenario 7. What happens if the situation gets worse and beyond what it is now? I think we, by God's grace, it has not hit 10%. But if the situation gets worse to beyond 30%, then the industry will be hit significantly. Just some numbers. The industry produces or contributes 240 billion to the GDP of the country, 131 being general insurance, and the rest for life. Under the general insurance, the biggest classes is motor and medical. And motor is the one that is, and medical is the one that is heavily hit. Will be heavily hit with claims if the situation gets worse than it is now.
All right. Very important statistics that you're bringing up there. I'd also want to just pick Mr. Kiptum to also weigh in.
Thank you, Abby. I think you've made very apt comments on
Carry on, I can hear you.
On what is going on. Yeah, there's Amigo. So actually, there has been a number of issues that have arisen out of the pandemic. But most of the issues that have been raised to us has been on consumer protection issues. And most consumers of insurance services have been wondering whether they are covered under this pandemic. And that has been the biggest effect that we have seen so far. I think the other issues are still coming up, and they are being considered by the insurance companies. But the most important thing is that consumers will be given protection in accordance to their contracts that they have signed with insurance companies.
All right. Thank you so much, Mr.
Of course, the issue of penetration has been...
Please proceed.
It's been a thorny issue. Yeah, it's been a thorny issue. The numbers have come down, basically because in 2012, ICT was included in the counting of, in terms of GDP, which hitherto had not been there. But at 2.5%, it is not the best place to be. It is something that we want to push it up. And we are looking at creating awareness and creating access and affordability. And of course, through technology that we are adopting, and we are encouraging the industry to adopt technology to enable them to distribute insurance products more cost effectively, and more so now that there has been restricted movements within the country, and where agents and insurance brokers cannot be able to sell those insurance policies. So we expect that once technology is adopted, we will have numbers going up.
All right. So the future looks brighter when the sector players embrace technology. Let me bring in Mr. Geshuhi. Your opening comments in regards to how have we been coping as a country when it comes to the pandemic, and how hard has the insurance industry been hurt from a statistical point of view? All right, we'll be getting back to Mr. Geshuhi once we reconnect him back. But let me take it back to you, Mr. Shigoli. When we look at the big picture right now, with the numbers you've just posted, that 240 billion is what the insurance sector is worth and what it contributes to our economy. When the impact of the pandemic set in, what are some of the issues that have come up? Are we seeing customers being unable to continue paying their premiums? What are the likely situations that you've been seeing and experiencing in the industry?
Now, the first issue, yes, you are right. The customers have had a challenge in meeting their obligation of payment of premiums. And that has led to cash flow issues on the insurance side, because if clients don't pay their premiums, then you are not able to collect as much money to pay the claims that arise from admissions or other claims, liabilities that come from insurance. So one of the biggest issues has been payment of premium, which has been affected by the slowdown, and people are staying at home, and small businesses are not able to continue running as usual, and that has affected the premiums for insurance companies. The other thing is around work itself. You see now 80% to 90% of staff or workforce are operating from home. So most insurers have to put in mechanisms to ensure people operate from home, and also cope with any cyber risks, and incur additional expenses to ensure people are functioning well from home. And this requires a lot of investment from the staff side, because you need to buy computers and etc. to make sure that they work well from home. And there are other challenges that come with working from home, because it depends on whether somebody was really prepared to do the work at home. The other issue is around, like for now, towards September, 2 months from now, people will need to do compliance issues like audit, and we don't know. Now, audit involves a lot of paperwork and checking every paper. I think that's a problem that will come up with insurance companies to ensure that they comply with the timelines for every item, because there are requirements to comply with certain aspects of returns, and they require time to be invested inside. So just to mention a few, those three. The other aspects, of course, is on the claim side. Mm-hmm. On the claim side, if we hit a 30% prevalence rate in Kenya, then the claims could escalate to almost 33 billion, depending on where the admissions happen. And this is mainly on medical, because the medical is the one that is heavily hit. And considering that you collect only around 42, 44 billion, and you pay 34 billion, then you can see where the industry will be headed. And those are the scenarios that the industry players are looking at. And I'm a member of a committee at AKI that we are looking at the unfolding of this condition every day and every week, to ensure that we put in place mechanisms to cope with it.
All right. I don't know if we have Mr. Gishui back online.
Yes, try more question.
All right. Mr. Gishui, can you hear me?
I may have lost out most of what was said here. Yeah, I can hear you.
All right. Great to have you back. We're just looking at the impact so far of the pandemic on the insurance sector. We've had quite a number of matters being raised by the other panelists. But looking at you as the Association of Kenyan Insurers, just paint for us a picture of how things are when it comes to customers being able to service their premiums. Have we seen some defaulting? And what impact will this have on the insurance business at large?
Thank you. At the risk of probably repeating what may have been said, because I was a little bit out of air, I would like to be more specific, and I would like to touch on a number of classes of business, and probably just bring out exactly the impact that these classes have gone through as a result of the pandemic.
All right.
If you look at motor, which constitutes.
All right, carry on. Just try and keep them tight. Keep your comments tight.
Okay. Okay. If you look at motor, that constitutes about 40% of premium written in general insurance. We have witnessed a lot of cancellations of policies purely because of inability by the motorists to pay the premium. We have also witnessed a scaling down of comprehensive covers to third party, and we have also noted substantial non-renewals of expiring policies. Of course, now coupled with the fact that even those ones who probably are buying new motor vehicles, or who may have bought new motor vehicles, may not have the premiums to be able to buy the cover. Sure. So that is a major impact, particularly so on the private insurance business, private motor. On commercial, and particularly so the PSV, the public service sector, with the lockdown, this reduced the movement. Most of these vehicles cannot travel to Nairobi. They have been restricted to probably just serving in their own counties. And you know, Nairobi normally Nairobi and the environs accounts for about 60% of the PSV business in this country. So the moment PSV, public service vehicles, have not been allowed to come to Nairobi, most of them have been grounded. Yes. When I talk about PSV, I'm talking about on matatus and buses. They have been grounded.
Correct.
And those owners of those vehicles buy their covers on a monthly basis. So you can imagine the impact that motor vehicle or public service insurance, the impact that they have actually gone through. Number two, and very quickly, I would want to cross over to life. Life insurance business is distributed through walk-in, walk-out by our agents. Again, with the lockdown and the restriction of movement, the agents have not been able to walk to potential customers. And therefore, the sales have come down drastically. And if you put the reduction in sales in life and the reduction in sales in motor, that touches on revenues that come to insurance companies. Now, with reduced revenues, then that has a direct impact on the ability of insurance companies now to pay claims.
Sure.
So if you connect the two, you can see the nexus between the reduced revenues because of reduced sales and the inability of insurance companies to probably meet their claims in good time.
All right.
Medical, and I know Shugoli may have talked about medical, but medical, group life, and pensions. These are covers which are employee-related. And we have all witnessed situations where employers have been sending employees on compulsory leave. Others have outrightly been laying off employees. And therefore, that also has a direct impact on the purchase of the group medical insurance covers by employees, by employers, the pensions contributions, which are supposed to come from employee benefits, so on and so forth. So, in other words, what I'm trying to say is that when you look at it, and when you look at the impact of the pandemic, it has had a major direct impact on the revenues. And that also translates to an impact on investments, because these revenues that insurance companies receive are the same monies that they invest. Yes.
Thank you, Mr. Gishuhi. And to my fellow panelists, we want to go on a quick commercial break. I'd like to remind our viewers that you can engage with us on our Zoom platform. And remember, our hashtag for this forum is Insurance Awareness Day. And in case you are wondering, how do I get part of this discussion? Remember, you can join in via Zoom, and our code is National Insurance Awareness Day. Let's get you talking. Let's hear your experiences so far. When we come back, I'll be taking it to Mr. Morania, who will be also giving us his perspective on how the business has been hit and are there opportunities. Is it all gloom and doom? We'll be back after a short commercial break.